Gold just took off and passed its previous all-time high, and then it continued to smash through the $2,000 barrier. And if that isn't exciting enough for you, in this video, I'm gonna show you how you can easily invest for 3x, 5x, even 10x greater returns. I'm gonna show you exactly how this works, why it's happening, what you need to be looking for, and how to analyze these plays so you can find the big winners and 10x your gold returns. So stay tuned. Welcome back. If you're new to the channel, my name is Mark Moss. I believe that the only security we have in life is for us to take responsibility for ourselves because the system's broken. No one is coming to save you, and that's why we must learn to make money, grow our money, protect our money on our own. Now, if you agree and you want to hear more about these topics, click the like and subscribe button right now and hit the bell notification so you're notified every time I put new videos up. All right, now, today we are going to talk about 10xing our returns in gold. And this video, I'm just gonna warn you in advance, this video might run a little bit longer than normal, and that's because I wanna teach you how to find and invest in the very best asymmetric opportunities that we have today. A lot of times in the comments in the videos, they say that I don't give enough actionable information. Oh, it was a great idea, but there wasn't anything actionable at the end. And I recently did a video about the silver boom, and I talked about that, and I was showing you how to find undervalued assets. And the amount of positive comments I got were just overwhelming, so I decided I'm gonna give you a little bit more. You want more actionable information? You wanna learn something? Then this video is gonna do that for you, and I am going to show you how we can find 10x winners in the gold space. Now, as I already said in the opening, gold's flying, right? It's flying. It's already broke through its all-time high, continued to break through the key $2,000 level for the first time, and it has massive momentum behind it. And over the past 12 months, gold's tripled the return of the S&P 500, tripled it. It's tripled the Dow Jones and even the NASDAQ, which has been the best performing index. Now, as good as gold is performing right now, I think it's just getting started. And we haven't really seen anything yet, and I believe this is just the beginning of gold's rise. And today, like I said, I want to show you how we can easily 3x, 5x, and even 10x by investing into gold as this bull market in gold continues. Now, it's just forming up, it's just building momentum, and we are just getting going, so you have lots of time to jump into this. But first, before we do, let's take a look at a few reasons why I think gold is just starting to take off. So right now, we have lots of people that are just starting to notice, just starting to pay attention to gold again right now. And it's not just the retail investors like you and I. The retail investors, we've already been paying attention. I've already been making videos on this for like 2 years, and you guys have probably been watching the videos, right? But it's not just the retail investors anymore. According to a Bloomberg dispatch, they said gold is turning the heads of pension funds, insurance companies, and private wealth specialists. Managers who run long-term portfolios worth trillions of dollars are taking interest in gold as they search for returns in a yield-starved investing landscape. With $15 trillion in global debt offering negative yields and the Federal Reserve likely holding rates near zero for the foreseeable future, some on Wall Street are questioning the wisdom of owning bonds, and they're starting to look elsewhere for assets to hedge against equity volatility. And according to UBS Group AG strategist Joni Teeves, she said, quote, "Gold ownership among the professional class is viewed to be low. The total value of investor positions in gold futures and exchange traded funds is equivalent to just 0.6% of the 40 trillion in global funds. That position could easily double without the allocation looking extreme," she wrote in a note. End quote. So as you can see from the chart that I have up on the screen right now, at 0.6%, this number's barely moved since 2016. That was the last time this chart was updated, and it's still lower than in 2012. Now, never mind like the big time hype that we saw 40 years ago when people were literally lining up around the blocks just to buy physical gold. But you don't have to take it from me. Take it from Geraldine Sundstrom, an expert at PIMCO, the 1.9 trillion strong asset management firm renowned for its bond strategies. Quote, "We need to look for safe haven beyond government bonds." End quote. Now, given PIMCO's view that rates will be kept low for a long time, not just PIMCO's view, lots of people's views, I've been reporting it for a really long time. Even the Fed told us they're not even thinking about raising rates. And so we see that. PIMCO sees it, and it's causing depressed levels on real yield. Now, gold feels like a really good way to diversify out of that. And so those are many reasons why, beyond you and I being interested, we see gold going way, way, way higher in the short term, midterm, and the long term. So there's a couple ways that you can get into the bull gold market, okay? It's just getting started, and if you want to know how to get in, a lot of people ask me in the comments, how do I get invested in gold? How do I start in gold? There's really two main ways, all right? One, you can buy physical gold, all right? Bullion, coins, whatever, right? You buy the physical and you hold it. You put it in a safe, done. The second way is you can buy gold stocks, all right? Now, this doesn't involve holding the gold like it does with the physical. Now, for some, I can already hear you in the comments below, they say you have to buy it and you have to hold it. If you don't own it, if you don't hold it, you don't own it. And I think a lot of people envision this like doomsday scenario where the financial system as we know it ends, and then you probably need your physical gold to go out there and like trade in the marketplace. You know, you need to use gold to buy food or something like that. Now, I do own physical gold, and I do think it's a good idea to have some, all right? I own it, I think you should own it, and I think you should hold it, all right? But I also own lots of other assets that I buy the assets for investments. These are investments that I'm expecting a big return on. And so for this, for option number 2 of owning gold, we can invest into it using gold stocks. And I believe that investing into gold stocks is one of the best asymmetric bets that we have today, outside of Bitcoin, of course, but I think gold stocks hand us a tremendous opportunity for asymmetric upside right now. And the reason why we can expect to get $3, $5, and even $10 back for every one single dollar we put out is because as the gold price goes up, which it is, as I was explaining, then we should see gold stocks go up multiple times. So if we want to buy physical gold, the upside we have is good, right? I think we could easily see gold double from here, and you could make 100% on your money, and that's great, 100%, triple-digit returns. That's amazing, all right? But with gold stocks, I think we have chances to make 5x and 10x on our money if you know how to do it. So let me show you how, all right? So in order to do this, first, let me illustrate my point with a chart. So you can see on the screen right now a chart of 2 common gold mining indexes versus the price of physical gold, shaded in blue. So over the last 3 months, as you can see, the price of gold's risen pretty good. It's risen about 15%. But an index of gold miners, which is the red line, is up over 21.5%, while an index of smaller, so-called what we call junior miners, the green line, is up over 40%. So physical's up 15, miners up 21, juniors up 40%, multiples over the physical. Now, we want to understand why these performances differ so much, all right? When we can understand that, then we can understand the key to making money from the gold mining investments. Now, all gold obviously comes from the ground, right? But as far as miners go, that's about where the similarity ends. Gold producers are broadly divided into senior and junior miners, all right? We're going to call them miners and junior miners. Both of them are leveraged to the price of gold, but they do it in different ways, all right? So senior miners are really big, really large established global operations, and to investors, they have a lot of value, and so because of that, their share price is a function of the amount of gold that they have. They have the mining rights for them, the quality of the gold, the ore in their mines, is good. It's more than the cost of production. But with junior miners, they're exploring for new gold deposits, and they operate more like exploratory mines. So their goal is to find gold ore deposits that are big enough, substantial enough to attract a bidding war from the senior miners. That's typically what their strategy is. So the share price of the 2 different types of miners react a little bit differently to the gold price anyway, right? It's multiples on the gold price. So if all things are being equal, all else being equal, when the gold price rises, the senior miners who control the most amount of easily accessible gold, high quality ore, are going to see the largest share price increases relative to other seniors. But for junior miners, the share price depends on ore volume and quality as well, but also on the potential future costs of production. And this is where it gets interesting for us. So when the gold prices rise, junior miners with easy to access shallow deposits in countries with like good investment climates, they're going to way outperform those that have just maybe marginal deposits, and especially in difficult environments, all right? And then the key here is that the longer we expect gold's price to rise, then we're going to see senior miners trying to ramp up production really, really quickly, which is great for junior miners that are looking for the buyouts. Now, if you've watched some of my other videos, I believe we're entering into a decade-long bull market. I call it the trade of the decade. And so, again, the key, if we expect gold prices to rise over a long period of time, then it's a great environment for junior miners, all right? And so the reason why junior miners move so much more than senior miners is that junior miners are way more leveraged to the gold price. So when it rises, their shares way outpace those of senior miners and dramatically. And we've seen it in the last 30 days, 60 days, 90 days, as I showed you in that chart. So if you believe the long-term trend in gold is up like I do, then junior miners is where we want to be, because we can benefit from years of potential future production. And like I said, this is one of the many reasons why I think junior miners could be the best investment for us today for big gold profits. So what makes a good junior miner? How do we decide which ones are good and which ones are bad? Now, I did a recent video, as I referenced in the beginning, on silver, and I showed how we want to find asymmetric returns, and we want to really find something that's undervalued. And in that silver video, I'm going to link to it up here, I gave examples of 2 different companies, and I talked about how this one was undervalued and look what happened to it. And here was another one that was undervalued. The comments in that video were overwhelming. People loved it. They wanted me to do a little bit more instruction and teaching. And so I thought, why not? Let's do it. I evaluate gold companies all day, so why not share a little bit of the criteria with you to show you how to find the very best gold mining stocks. And so let's break it down. But instead of putting it just into theory and speculation, let's break down an actual one so you can see it really happening in real time. So there's 3 things that I like to focus on, all right? I like to look at solid foundations, sound management, and the reserves, how much gold they have in the ground. All right. Now, like I said, instead of talking about this in theory, let's break down a real life company to see how this works. So we're going to look at this new company called GOLDx, GOLDx. It's a publicly traded company. It's on the TSX exchange, lots of volume, big market cap. Let's break it down. Now, out of the 3 criteria I mentioned, I usually start with the team, all right? I like to look at the team to see if they have good management, because the reason why I start there is I figure that good management isn't going to be at a bad company, right? If they're really good and they have good track records, they're only going to be aligned with good projects. And by doing that, it allows me to just filter out all the rest of the junk. So instead of going into every single company and looking at all the details, I need a way to quickly filter out the junk. And so I do that with the team. So I start there. So when I look at the GOLDx team, I see they're led by a guy, Paul Matsayek, and he's the CEO and he's the chairman of the board. Now, he sold 5 public companies, creating almost $3 billion out of gold mining, which is a massive amount. It makes him actually one of the most successful gold mining CEOs around. I also see the second largest shareholder is Frank Giustra. Now, he's a mining billionaire, and he's one of the co-founders of Goldcorp, which is the world's second largest miner. So when I look at that, they're pretty good signs of good management, a good company. Now, you don't have to know a lot about the industry. You don't have to know a lot about each individual person's background and dig through their LinkedIn bios. You can just look at what they've done previously. Now, like I said, when your largest shareholder is the co-founder of the second largest miner, or when you have the CEO is most successful CEOs in the gold mining industry, it's pretty good. So I can take that and then I can move on. All right, so that passed the first filter. The next one we look at is I like to look at the financials. Do they have solid financials? So when I look at the GOLDx financials, we can see that they own a project called Toro Paru, and it has a after-tax free cash flow of over $1.77 billion. And so again, if I want to look at this, and I'm trying to make it easy for everybody, what this tells us, it's a pretty good opportunity for a major miner to purchase it. Remember, we talked about when we have a sustained gold price, the best opportunity is these big miners will come and buy the miners. And so we want to see, is this an attractive asset for a major to purchase it? And we look at this one and we go, the purchaser could basically buy this and pay back the entirety of it after the pre-production costs of about $378 million in only 2 years. So when you can buy it and pay it back in only 2 years, that's a pretty good deal. Now, GOLDx's market cap is about half of that amount, which also shows that it's undervalued. This is just kind of back of the napkin financials right here. Like, this is pretty easy. If we dig in a little bit more into the financials, we can see that Wheaton Precious Metals is a giant in the precious metals mining space. I'm not going to go into them, but they've committed $150 million to finance the development of this Toro Paro project. So we have good management, we have good financials, and we even have good investors that are putting up money for that. So that's pretty good, right? Now, the next thing, the third thing we want to look at is the reserves. The reserves is the amount of gold that's in the ground. And we can see that GOLDx is sitting on one of the largest gold deposits in the Americas. It has about 735 million ounces that are measured and indicated, which makes it one of the best for potential buyouts in the industry. Like I said, when we have a sustained price, that's what we're looking for in our juniors. And so each one of these things keeps checking that box. Now, when you look at the free cash flow estimate, it looks really good. It looks like one of the best around, which tells me it looks like it's undervalued to me, but don't just take my word for it. If we look at one of the Canadians' largest banks, the RBC, they said that they think it's undervalued as well, based off of the size and everything else. So the last thing that we kind of focus on is then we look at the returns. How much money can we make? Because like I said, we want asymmetric returns. Asymmetric returns mean that we make more on the upside than we have on the downside. In that silver video, I mentioned billionaire hedge fund investor Paul Tudor Jones and how he has this strategy where he never invests $1 if he doesn't think he can get $5 back. And so when we invest into gold mining companies, we want to look for the same thing. And so the best way we can guarantee this is to buy an undervalued asset like a gold mine that's been kind of mispriced and it's sitting on reserves that are about to shoot way higher, like we're seeing with the gold price right now. So in closing, hopefully you learned a little bit on the 3 things that I like to look for, filtering with the team first and then down. Now, this was just an example. This is an illustration. I'm definitely not saying to go out and buy GOLDx right now. Do your own research, but use this as a tool because investing into gold, investing into gold miners, juniors are going to be some of the best investment opportunities that we have on top of Bitcoin, of course. All right, does that make sense? Hopefully that works out for you. Now, like everything, the more you do it, the more you practice it, the better you get, the faster you get. So at first it might seem kind of weird. Where do you find this information? How do I compare it? But the more you do it and the more often you do it, the easier and the faster that it becomes. All right, now there's more to it than this. These are just kind of the first 3 things that I look for. I can't cover all in this video, of course. I've already gone long because I'm trying to teach you here, but I do have a free report that I've put together. I've offered it to you before, and it just has kind of more details on how you should look at valuing a gold mining company. You can have the report for free. My gift to you, just look at the link down in the description. Go to the description, click on the link, download the report. And it's going to give you more information on how you can invest in these gold miners because I believe gold is the trade of the decade. And gold miners, especially junior gold miners, are going to be the way that you can 10x your returns on that. And give it a read if you're considering investing into gold mining stocks and other ones like GOLDx, all right? Also, leave me a comment. Let me know. Give me a 1 if you're already investing into gold and gold miners. Give me a 2 if you want to or you're going to invest into gold miners. Give me a 3 if you would never. It's too risky. You want to hold physical gold or whatever. 1, 2, or 3, let me know in the comments down below. If you like this video, give me a thumbs up. If you don't like the video, give me a thumbs down. Either way, let me know. Leave me a comment so I know what kind of videos to make you in the future. And that's what I got for you today. To your success, I'm out.